You're welcome to this weekly wrap-up or weekly technical analysis based on what we are seeing on the charts, Euro USD and USDJPY, and that's what we're talking about in this video. You've seen that the market is coming back down in respect to analysis. Market is going to come back down. I sell Euro USD and USDJPY right here in this very video, and that's what we are seeing right now. For Euro USD, market is still pumping upward, but I'm going to talk about that. But for USD JPY, market is selling all the way to the downside. And if you look at Euro USD right here, market is approaching critical level of important resistance, and that is why I said look for sell opportunity in that very video after liquidity failure, moving all the way to the upside. And that is what we'll be discussing right here, and what you should be expecting in next week of trading. So pay attention and watch this very video to the very end. If you are new here, my name is Paradise. On this channel, I discuss everything about Forex, day trading and investing strategy to keep you profitable. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more Forex videos like this one. Also check the channel for all the Forex content. On the USDJPY chart, one day we've seen the market continuing all the way to the downside with the Jackson hole. That is the second day of the Jackson hole. Wrap up the weekly trading yesterday, and then the market is coming all the way to the downside with this very bearish move downward. And that is my expectation for market to continue this move all the way down. Okay, and I talk about market breaking out of this very level of important support right at this point, which is what we are going to see in the next week of trading. And this is very pivotal to all of us as traders, especially for those of us that trade USD JPY. What I am still expecting on this very chart is very simple, because market have high capacity of continuing to the downside, especially after we create a new low lower than the close of this very level of important support. And what I am expecting on this very chart next week is the market to continue downward after we see a breakout on this very level of important resistance. Not only that, you see that this week we make a progressive move downward for bearish move. So bearish momentum was very significant. That means the bears have taken control of the market since from the beginning of this very week right here on Monday all through to Friday before the market closed with this very last candle. And that is what I am still expecting after this very breakout, okay, that should happen on support on Monday, because if that did not happen, market have capacity of moving from here all the way to the upside. But on the high side, expect the market to break out here and move all the way to the downside. And another thing you need to pay attention to is the fact that the stochastic RSI indicator have crossed over, as you can see at this very point, and not only a crossover right here at the overbought condition, but also the market have moved away out of the overbought condition below this very 80% line right here on the stochastic RSI indicator. So this is very important. Okay, markets have high capacity of moving from here all the way to the downside, okay, entering into the oversold condition, and that is what I am expecting now. So that also put this chart on the high side of moving all the way from here downward because of this very crossover, and then the market has moved on the indicator below the 80% line, okay, which means market have the great capacity of moving downward. So I am expecting that as we resume the market next week, market should keep selling all the way to the downside. So what you need to still look out for on your chart is selling the market on USD JPY. Very importantly, you still have to look for selling the market to the downside, because that is what we are seeing right now in the market. And then another thing is that with the Jackson hole yesterday, we see the market come back down. This moving all the way to the downside is a sign that Fed is signaling a rate cut this very year, which is very important for all of us as traders. So if that happens, then we're going to see the US dollar become weak, okay, a little bit, and then this will further fuel this movement all the way to the downside on USDJPY. And this is very important right now on the chart USDJPY. And if you look at the 4-hour chart on this same pair USDJPY, see something very different right here is that the stochastic RSI enter into overbought condition at this very point right here, and then the orange line or the blue line cross over the orange line, and the market is coming back down. These charts have high capacity of moving downward as well. So from this area level of resistance right here, we have another resistance at this very point right here, another resistance right here in the same zone. You see the market from this resistance coming back down with a failure to create a high higher than the previous high right at this very area. So it means that market have capacity of moving down into this very zone of oversold condition. So as we resume the market on Monday, expect the market to move downward. Keep selling the market on USDJPY and then Euro USD. Very importantly, I talk about the fact that liquidity need to be satisfied before we see that very sell-off. And one thing about liquidity satisfaction is that you need to monitor it on the 1-day chart, and then you look at it on the lower time frame, for example, the 4-hour chart, to see really if it has satisfied before that movement is going to come into the market. But right now, we've not seen liquidity satisfaction. And that is why I said this very level is the next target we need to pay attention to for liquidity satisfaction, because if liquidity satisfaction happen around this very area, then market is going to come back to the downside for a counter trade sell opportunity right to the downside on Euro USD. So what we have seen right now is liquidity fill up on this very level of important resistance at this very point, at this very area, to be very specific. And then after this, that fill up, market is approaching here. So the next thing is to pay attention to this very area, because market have capacity of entry into this point, this level of resistance, like I said in my immediate last video, and then from here come back to the downside after liquidity satisfaction. Another possible scenario that we can also see here is liquidity grab. That means market can go a little bit upward, then grab liquidity that is higher a little bit than where the recent high or the previous high at this very point is, okay? And then after the grab of liquidity, begin to come back down from this very area. And you need to monitor this to be very sure that liquidity have been satisfied. Then once liquidity is satisfied in every market, it must come back to the opposite side. For example, in this case, market is going to come back down for a sell opportunity or a counter trade on the lower time frame. And this is what you need to focus on right now. So pay attention to market moving still into this very area, but I am looking for a potential drop after this very movement to the upside. And like I said earlier, this very movement is fueled to the fact that yesterday was the Jackson hole. And from here, market begin to move upward, okay, making significant new high, higher than the previous high at this very point of 1.11708. Notwithstanding, looking at the indicator, you discover that the market is already at overbought condition, okay, with this tiny little crossover right here, but it has not been satisfied because market have to come out of this very level of overbought condition below this very 80% line on the stochastic RSI indicator. So from this very area, I am expecting that market move a little bit slightly into this very level, okay, from here into this very area. And then from here, we should see liquidity satisfaction before market is going to come back down. And then from that area, I am also expecting that there should be a complete crossover between the orange line and the blue line, moving downward below the 80% line on the stochastic RSI. This will give another level of confidence that the market is about to move downward. And that is what we should be expecting next week. So on Euro USD, don't buy and don't sell. Okay, don't buy the market, don't sell the market, because if you are buying, you should be in a trade right away from this very area or a trade from this very zone. Because after the cross of this very key critical resistance, market move all the way upward. So where the market is right now is not a place to buy, and it's not also a place to sell, because for us to sell, that liquidity satisfaction need to happen before market will begin to come back to the downside. So this is what I am expecting, and this weekly bias is very important to our trading next week as traders. So pay attention to this on Euro USD. Don't buy, don't sell. But for USDJPY, continue to sell the market all the way to the downside because the market is still in that selling formation. This is important right now, and pay attention to this chart. Put it and see how it will work with your strategy. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more forex videos like this. Also check the channel for all that forex content. And then if you have not registered with any broker, I have a recommended broker for you in the description of this very video. Please check it out and do your registration right away. Thanks for watching today's video, and I will see you next time. Bye.